Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 29th of July. Starting off with Boohoo Group, where there have been some signs of stabilization after the calamitous falls of earlier in the month. We've got this triangle breakout there, so a sort of 3-week-old triangle. The top of the triangle broken there at 255, uptrend line nominally at 250, and while we're above that, looking for at least a retest of the 200-day moving average area at 298 pence. But as is normally the case, one would only suggest that this is back in full bull mode if we see an end-of-day close back above the 200-day line. You can see there were a couple of attempts earlier in the month to regain that, but it didn't happen. If you're a fan of the stock, though, there is a rising trend channel from the beginning of the month that you can draw from 250 up to 430, that upper parallel there. So on that basis, if you, as I said, if you're a fan, then you'd be looking for, while there is a 250 plus share price, then 430 or so could be the target within an initial 200-day line destination. Next up is Edenville, which I think somebody on Twitter sort of anticipated that I might be looking at. What you can see here is this triangle break that we had. We've had a couple of full starts. I suppose the message here really is that we need a proper clearance of 0.05 pence, and we need to remain above the 200-day moving average of 0.04 pence. But if we get that, then, and only if we get that, then the target would be the top of that rising trend channel, drawn from November up to 0.1 pence. But at least while we're above the 200-day line, nominally in the bullish camp. Onto a stock which I thought I'd covered before, but turned out to be that it was European Metals rather than Europa Metals. Obviously an easy mistake to make if you're not paying attention. Good chart here in the sense that we had that final bear trap gap reversal mid-month versus around the 5 pence area. We then broke a line of resistance from the end of April around the 6 pence area, which I obviously missed. And we've actually hit basically hit the target from the broadening triangle from December at 25 pence. But what will be interesting to see here is if we can clear 25 pence and maybe get an end-of-day close above that, whether the next stage up towards 40 pence could be delivered. Normally these aren't because it's obviously come up a long way already, but above 25 could take the shares up to 40 pence plus is a best case scenario. At this stage, I suppose the stop loss is really back below that December 16.5 pence peak, which is obviously quite a lot to risk from current levels, but that is the lay of the land at the moment. Feedback, not quite so difficult. Looking at this chart, here you can see we have had a triangle breakout, which is so far held, and also a break through the 50-day moving average at 1.03 pence, and while we're above that on an end-of-day close basis, looking towards the top of the January trend channel at 1.6 pence over the next few weeks. Stop loss probably the best one at this stage, if you can afford it, back below the 200-day line at 0.93. Otherwise, it'll have to be around the 50-day moving average area at 1.03 pence. Good to see the following stock rise. Immotion Group has bounced off a broadening triangle in place since March, a gap through the 50-day moving average, which is normally a decent sign. At this stage, while there's no end-of-day close back below the 50-day line, we're looking for further, perhaps significant upside. Best case scenario of the next 2 to 3 months is the top of the broadening triangle at 6 pence. Obviously, there's retesting the 4.7 pence April peak as an alternative. If you're cautious on the shares, which you might be after all the volatility that we've seen over the last few days, you wait for an end-of-day or end-of-week close above 3 pence post-May neckline resistance before taking the plunge on the long side. Been meaning to look at following stock for quite a long time, Loopup, but for some reason, because of the name, I just didn't like it, and the fact that it had already gone up a lot, I haven't covered the shares. But the gaps higher are clearly continuation signals on this daily chart, and at least while there's no breakback below the initial July resistance at 194, we should see further upside. Best case scenario target over the next 1 to 2 months is the top of the January trend channel currently pointing as high as 300 pence. So maybe there's still more to chase in that situation. Next stock is one that for some reason has been picked on by the odd bear and the odd shorter, but as you can tell by the price action, it's been a decent consolidation here for Novacyt over the last couple of months, basically finding new support at old resistance around the £2.22 level in February and towards £2 in March. So, as I said, old resistance becoming new support. The big breakthrough today, which I hope will be a lasting one, is that we've broken the June resistance line at £3 and above £3 on an end of day close, looking towards that May resistance line at £4.30. Basically, the stop loss back below £3 should be enough in this situation, given the latest break that we've had. Best case scenario target for fans of the stock, which I know there are many, would be a move to that upper parallel there, the top of the April or the March trend channel at £6 plus. But at least while we're above £3, looking for £4.20 to 30 at the moment. Funding news for the next stock, Integumen, and here we've seen that the shares have already recovered quite well from the March support, so a sub 0.8 up to nearly 2 pence the position now, so basically tripling from the lows at the best. Current situation, probably waiting for a weekly close above 2 pence to then open up the top of that rising February trend channel at 2.6 pence. Stop loss at the moment back below 1.8 pence should cover it if you're close to the market. Otherwise, just use the 200-day moving average at 1.6 pence. Just wanted to cover this stock. The following stock, Symphony Environmental. After the recent spike that we had, I think the game on, I think it was last Friday, was trying to work out whether the shares would find support here at March resistance around 25 pence or need to retest the 22 pence area of the April peak. In fact, what we got was 22.3 pence, so basically it was the April peak that won. And while we're above that, though, old resistance becoming new support and an uptrend line from March, we could see a partial or even full retest of the recent spike towards 45. Initial target, probably safe to say, reasonably safe to say, would be the resistance on the way down around the 30 pence level while we hold above 22 pence. But obviously, we can justifiably dream of a retest of 45 pence plus on any break of 30 pence. The next stock is one that I covered very recently, but I just wanted to clarify the situation here. The shares of Supply Me Capital have been in a falling wedge formation since April. It's now become very tight, so I suppose it's between around the point 0.4.5 and 0.08 in that little range. But what we need to see really is an end of day or an end of week close above the top of the falling wedge and the 20-day moving average at 0.08 pence as the recovery trigger. Otherwise, we could keep drifting down within that falling wedge. Initial target would be above 0.08 pence, would be the 50-day line at 0.13 basically. After that, though, if we can get some momentum and we snap back sharply, then the big target there at the top of that broadening triangle drawn from April. But at this stage, very much focused on breaking 0.08 and then up to 0.13 as an initial target, which is obviously early July resistance. So perhaps not to get too excited at this stage. A couple of stocks to finish, which I know have a lot of investor interest or retail investor interest. First is UK Oil and Gas. 2 plus points here at the moment. The first is the way that we had lower lows for July, but the RSI RSI trace remained higher than it was in June, so that's bullish divergence. And the second one is what we want to see at Supply Me, i.e. a break of a falling wedge, which we've had today versus 0.16, so above 0.16 pence. Initial retest of the 0.22 area at the 50-day moving average but only end of day or end of week close above the 50-day line opens up a retest of post-March resistance at 0.5 pence plus. Finishing up with Union Jack Oil, which has been a slow burner, which is probably the way most of us like it over the recent past. In fact, rising small amounts day by day, but not really hitting the leaderboard. Here, just to update, we clearing the old June resistance around 0.22 opened up the bull argument for the shares, and the latest break of 0.25 opening up the prospect of a move towards 0.38 or perhaps up to 0.4 pence at the top of that rising trend channel from February. Only back below 0.22, currently delaying the upside scenario that would break the floor of the 2020 price channel. That's it from me today. More updates tomorrow.